What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down why tomorrow is going to be an absolutely massive day for the entire stock market, for Tesla, for millions of everyday Americans, because we have the big FOMC meeting and the rate hike decisions coming out. So I'm going to break down how this stuff may affect Tesla, and once again what the news, data, and technicals are telling us. But before I do that though, before I get into any more details about how all of this stuff may affect Tesla's share price for tomorrow, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 10 days. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was up almost 8% for the day, and overall we did actually get a very bullish day as I predicted. However, it ended up going even higher than I thought it would, and that's because Tesla was hit with some very bullish news. Now, before I break down what this news was, I want to give you guys more context about why not just Tesla, but the whole stock market actually pumped, and this did actually help Tesla to some degree. What's happening is the market right now is getting excited for the Fed to make some good decisions. The market believes that the Fed could get very close to a pause very soon, given what's happening to the banking situation. And we are actually starting to see signs of the Fed kind of slowing down on the tightening and actually temporarily giving us some quantitative easing. Now, what does this all mean? Well, tomorrow is a big day. We have the interest rate hike decision coming out at about 1 o'clock p.m. Eastern Time. Then at 1:30 p.m. Eastern Time, we have the FOMC press conference, which is when Jerome Powell and many Fed speakers will be there. Powell is going to be speaking. He's going to be making some very, very big announcements, and this will affect the entire stock market. He could pump the markets, or he could actually crash the markets on their faces. You have to be prepared for this. You have to be ready. Now, let's first talk about what's happening around 1 o'clock p.m. What on earth is the Fed going to do? One thing to remember is the fact that the Fed has temporarily transitioned into quantitative easing. Now, will this last forever? Like I said, it's most likely going to be temporary. And that's because of the fact that the Fed realizes that the situation was very dire affecting the banks, so the Fed is coming in to actually help out. Notice how the stock market was rallying from like 2020 going into like 2021, and this was somewhat artificial because of the Fed continuing to print money, increase their balance sheet, and then transition into quantitative easing. They also had less stringent monetary policies that helped the economy continue to flourish despite what was going on in 2020 and 2021. Then the Fed realized, okay, all of this is going to lead to higher inflation. They increased the money supply. There was also like wars going on that played a big role affecting supply chains and many different factors. So the Fed transitioned into tightening of monetary policy. They started tightening a lot more, and we saw quantitative tightening continuing. So as the Fed started reducing their balance sheet, the entire stock market started to actually tank, and we did actually transition into a more bearish phase. The Fed was not pumping the markets like before, and we were not getting as much support like we saw from before. And then what happened was they kept doing this and doing this even going into like the last couple of weeks. But then starting on Sunday, which is just a couple of days ago, the Fed actually increased the balance sheet again. They're doing this to give banks more lifelines. They know the situation is very serious and many banks are at the risk of collapsing. This also tells us that what's happening behind the curtains may be even worse than what is being presented. A lot of banks are continuing to suffer. Now, because of the fact that the Fed did this, because the Fed ended up budging, this tells me that there is an increased probability of us getting a 25 basis point rate hike. I believe at this point, 50 basis points is off the table. It's very, very unlikely, extremely unlikely the Fed does that, especially Jerome Powell, given his history. And also because of the fact that the overall inflationary reports that came out, most of them were very high in the very beginning for like the month of February, but then there were a couple of other ones that came out which were not as bad. We saw the latest CPI actually come out not too horrible. It came out last week, the latest one. And also, the latest PPI report was kind of tame. So the Fed does not have to give us 50 basis points. I think they're most likely going to try to slow down a bit because it would be way too dangerous for banking and the financial system right now. We don't know if the financial system could handle it. And that's why I do believe, given his history, Jerome Powell is not going to give us 50. Just so you guys know, if they end up giving us 50 basis points, the entire stock market would crash. The entire market would crash very, very hard. And once again, I think that's extremely unlikely from the rate hike alone. If they pause, if the Fed announces a pause, the stock market is going to rally off that news immediately. It's going to be very, very crazy, and the market will love it. And then if the Fed comes out and they give us 25 basis points, the market could have a very mixed reaction. I don't think the market will crash immediately, but I don't think the market's going to just explode immediately either. I think the market's going to trade a little sideways, but it might actually hold up because, like I said before, we first have the rate hike decision coming out. It's going to be all over the news. Then 30 minutes later, Jerome Powell starts speaking. And that's what the Fed, not the Fed, the market is going to be waiting for. All right. So that's what I believe is most likely going to happen. The market won't tank way too much immediately when the 25 basis point rate hike is announced. I believe it most likely will be that, as the market is currently pricing that in, where there's an 86.4% chance that that happens, a 25 basis point rate hike based off the data from CME Group. And then what that tells me is if this ends up happening, the market should hold up in the beginning, but then later on, all hell could still break loose depending on what Powell says. The market's then going to be listening to what Jerome Powell is saying, what the Fed gives us about their GDP forecasts. If they end up decreasing it, that could increase the odds of a recession that's going to be seen. And that's going to scare the markets. That really depends on what they say. We're going to be looking at what the terminal rate hike is going to be, what else the Fed says, how Jerome Powell describes the banking situation. He could spook the markets or he could pump them. I don't really know at this point. It's very difficult to predict. So that's why we have to be very cautious starting from about 1 o'clock p.m. to about 1:30 p.m. The market's going to go crazy. Now, Elon Musk has actually taken a different point on this. He mentioned that the Fed needs to drop the rate by at least 50 basis points on Wednesday. That's what Elon Musk is saying. And he believes the Fed needs to start their pivot as soon as possible. Now, different people will have different views about this. In my opinion, I don't think it's time for them to pivot just yet. I mentioned that previously on this channel. I believe that there's still many signs that are suggesting that inflation is not necessarily out of the water, and there have been some red flags out there suggesting we could see another increase in inflation going into the summertime. And I also want to note that the Fed is continuing to print hundreds of billions of dollars again. Once again, they increased their balance sheet by over $300 billion. So when doing that, I don't think it's the best time for them to, start to pivot just yet. However, I do believe Elon Musk has a good point from the back end. And his point is the fact that right now, the tightening of financial conditions is happening, and we're starting to see stress in the credit markets. When this happens, the situation from a global standpoint is getting worse and worse. Musk is telling us that the Fed is likely going to crash the markets. They're likely going to hurt us eventually. I'm not saying it has to happen immediately. I'm talking about the like longer term future, going into the next couple of months, going into like early next year even. We could see more pain. There's likely going to be more unemployment, a medium to hard landing. And he's implying all of this. So I want everyone to be prepared for this in advance. I don't necessarily see a soft landing. I've mentioned this many times on this channel. I don't think the Fed was telling the truth about that. And Elon Musk is taking a very similar stance. So what's going to happen when we actually enter, that moment when Jerome Powell starts speaking? Typically, the market like pulls back when he starts, and then it just recovers quickly and just starts swinging back and forth and reacts to what he says. I really can't predict that, so we have to just be ready. I will break down the charts in a couple of minutes, but I want to break down some things about Tesla real quick. I'm going to try to make this video quick, by the way. I know there's a lot of information. Tesla has scored blue chip status after Moody's debt upgrade. So once again, that's very, very good news for Tesla. Tesla's been getting some very, very high ratings from a very important investor research firm. And they're continuing to tell us that Tesla has amazing, amazing potential. They're telling us that Tesla has an improved rating. And on top of that, they're talking about their expectations being very, very high for the company. They mentioned that the fact that they expect 1.8 million vehicles delivered globally in 2023, which would be a 34% increase compared to 2022, which is still very, very good. They also mentioned the fact that they're seeing a big, sharp increase in battery production and just many other very, very bullish things. This is part of why Tesla's continuing to just push up very, very hard today. They're getting very, very good ratings, and they once again have scored blue chip status. So very, very big congratulations to Tesla for this. They're continuing to improve, and more investors are seeing the potential in the company, and it's getting more credit that it deserves. On top of that, we have some very bullish news that's happening in Europe right now. Tesla sales in Europe are rocketing past many of their rivals according to new data. They're continuing to dominate the fields in Europe, and we're continuing to see Tesla just grow more and more and more. According to data from the European Union, Tesla sold about 19 plus thousand vehicles in just February. That's up 49%, and we're projected to see even more growth for the month of March. Once again, very, very awesome stuff. Something similar is going on in China. Some very, very bullish news just came out. Tesla surges on strong sales in China once again after another report. And what basically happened was, if you look at the last quarter, Tesla actually broke their record in China with 122,000 cars delivered. For this quarter so far, the quarter is not over yet. Between January 1st and March 19th, Tesla delivered, or at least it's estimated that they have 106,000 plus new registrations, which shows over 100,000 plus deliveries already. There's a good chance Tesla might break the record again for the first quarter, which tells me Tesla's killing it in China. They're killing it in Europe. And on top of that, I don't really have a whole lot of data for the US just yet, but if you look at US inventory levels, they're still very low right now. Remember, this is when Tesla's demand was actually dropping. This was in the middle of January. Then Tesla announced the big price cuts. Then we started to see the inventory levels drop again and again as more and more people kept buying and buying Teslas. And we're actually continuing to see this thing just remaining very, very low, which means there's high demand for Teslas in the USA too. This all tells me Tesla might get a good deliveries report for Q1 of this year. The only thing that does concern me though are the margins, because they did cut prices to some degree. Margins are something that are very important to look at. I actually showed you guys what many analysts said about that yesterday. Now, Tesla overall has about, let me just reload this to make sure this is up to date, but they have close to 150 million in volume. That's actually a very, very, very good sign, because we're still getting lots of buying pressure still. We're still starting to see shorts covering. We're still starting to see a lot of activity. It's about 152 million actually. So not bad, a little bit below average, but it's still pumping quite nicely. And the price is very sensitive now to less volume. That tells me right now, short covering is most likely happening, and we are going to likely see more and more buying pressure continue. I do believe Tesla has a very, very big amount of potential to try to continue tomorrow. But once again, I mean, I would be saying this, but if it wasn't for the FOMC, I wouldn't be as uncertain. That's really what the bottom line is. Now, when it comes to Tesla, we have about 61.8% making up the short volume going into yesterday. So there were a lot of shorts trying to pile in. We did see some selling pressure, which is why Tesla did slow down over time. But I do believe a lot of those shorts did get squeezed today, and we might see this continue early on tomorrow, especially as they start hedging. We saw the overall amount of Tesla shares shorted go from 16 to about 18 million as of like the very end of last week. I believe this is going to show a very big increase for Monday once the data comes out. And then it might show a big decrease going into like Tuesday and the later days, thanks to the fact that many shorts are now starting to cover, most likely. So what's going on with the charts? Unfortunately, I cannot give you guys a very good prediction for like the entire day, because we have FOMC and that's very hard to predict. I believe, however, we have a very important zone Tesla might fight at, and that's about 198.5 to 200. We're going to have to fight around here. I believe the market's going to hold up, maybe even rally a little more going into the open tomorrow. I think we're most likely going to hold, but then everything will depend on the rate hike decision, how the market interprets what we're most likely going to get, which is 25 basis points. and we might see the market pull back a little bit, trade kind of sideways, but I think we're going to hold up pretty nicely by the time the data comes out. But then everything will change depending on what Jerome Powell and the Fed end up saying. So I would presume Tesla's going to remain in the high 190s until then. But then I just don't really know what's going to happen, guys. I would love to be able to see the future, but I just don't know what Jerome Powell is going to say. And if I do try to make a prediction, I would essentially be gambling on what he could say. I don't know if Powell is going to be way more hawkish or if he's going to take a more dovish stance because of what's happening to the banks. I don't know what he's going to say about what the projected inflationary measures are, the GDP reports, not to mention the terminal rate hike, what the Fed members are going to do. I just don't know that stuff. So for that reason, just be prepared for crazy volatility near the end of the day going into tomorrow. For the last hour especially, it's going to be wild. It's going to be absolutely insane. Make sure you're ready for this. If Powell pumps the markets, Tesla's going to fly all the way up above 200. It's going to break 200. If we get a clean break above that, we have the potential to go all the way up to 210 if we get a huge rally, if Powell ends up pumping the markets very hard, if Powell ends up like coming out and like crashing the markets. The very important levels to watch for on Tesla would be, depending on where we are, don't forget that this line right here is going to become support if we're above it. But if we end up breaking below it and we just start dropping more and more, make sure you watch 195 followed by about the 190 range. Then we have this gap support around this 188, the gap all the way down to about 183. And if all of those fail, then there's going to be 180 followed by 176, which is where the next gap is down to 174. So make sure you watch all those support zones. I mean, I know it's a lot, but I'm just preparing you guys for anything just to be safe. And just get ready. Jerome Powell is going to cause a big move. On SPY, I mean, I do believe SPY is going to try to get to about 400 to 401 tomorrow in the very beginning of the day. I think we're going to try to pump more, but I don't know if that's it and the market's just going to, crash after that, or if the market keeps going. It's going to really depend on what the Fed ends up doing. But please remember that from a Wyckoffean standpoint, it looks like we're going to head for about 400. But here's the problem. But on the daily chart on SPY, there's also another bearish possibility, and that is initially it's going to be bullish, then it's going to turn bearish, and that is we could be forming a giant head and shoulders on SPY. This could be a left shoulder right here. This could be a head, and we could be forming a right shoulder where we see a slanted neckline right here, a slanted overall formation, which could bring SPY even higher. If we break 400 on SPY, this thing is going to fly all the way up to about 407, maybe a little bit higher since this thing is slanted. And if we fail around this like 410 area, maybe a little lower, then this thing could come crashing down, maybe because of a bank collapse or something else. Make sure you're prepared for this possibility. This is like the more bullish possibility. If we break 410, then we have to be watching the highs we made way back here. I really don't know. And it's also possible for us to reject off 400 and just start tanking, depending on what the FOMC brings. Be prepared for anything just in case. Now, when it comes to Amazon, this thing did almost exactly what I predicted yesterday. I actually called this out. I told you guys I was holding Amazon calls. Not financial advice, by the way. I actually closed them around 100. This thing is continuing to hold up. Got a really nice setup. Whether this thing continues to go for 105 or it just starts tanking from here will depend on the FOMC meeting. We'll just have to wait and see. I do believe the market's going to move collectively, and we are going to see Amazon try to push up in the very beginning. I don't know where it's going to end up at the end of the day tomorrow, though. NVIDIA, I told you guys this thing could break 260, and if we broke it, watch 264. We actually came very close to about 263.5, very close to 264, but we ended up failing around there, and we're still just barely holding up. Right now, we have an indecision candle, essentially, and we're just going to wait and see what happens with FOMC. This whole thing could just tank, depending on what Powell does, or it could just keep going and try to break 264. NEO got some very bullish news with the new third generation battery swap stations coming out sooner than expected. If we're bullish, this thing could retest 9.7, then get to 10. If we're bearish, it's going to come all the way back down to 9. If that fails, then we have this gap all the way down to like 8.75. Make sure you're prepared for anything. But once again, I do think the market's going to hold up and maybe try to rally as we approach the rate hike decision as of right now. On Apple, 160 is possible, but the problem with Apple is we do have a rising wedge like formation that's developing. I think it's more clear on like the hourly chart. If anything, be very cautious with Apple. I do believe that it could try to get to 160, but we'll have to be very careful once we start to see things play out from the data and the FOMC. Make sure you watch support around 157.5, if not 155, resistance around 160, followed by 162.5. For Google, this thing looks pretty bullish after the AI events that came out. I believe this thing could get to about 109 if we break 106. That's the more bullish possibility. If we're bearish, it's going to retest 105 flat and then come all the way down to about 103 flat. So it could go either way depending on tomorrow. Be prepared for anything. But like I said before, I do anticipate the market to hold up and try to push as we approach the rate hike decision. For Meta, 202. If we want to be more bullish, we have to break 203.5. If we break it, we have potential to go all the way up to 208. If we fail and we end up coming down, 200 flats is going to be support, followed by about 194.65. For the QQQ, this thing got very close to my target. My target was about 309 to 310. We closed around 310.34. If we're very bullish, if this thing breaks 310, 313 is possible. If we're bearish and this thing breaks down, 309 is support, followed by 306. And there's also this gap all the way down to about 306. Make sure you watch both of these areas very carefully. Overall, from a technical standpoint, it still looks bullish, but once again, technicals are not everything until the whole like rate hike decision comes. Dollar is down. It went almost exactly to my target of 103.25. We do have the potential to come down to about 103 again if the market continues to pump into the early hours. But the dollar is going to react to what the Fed says about monetary policy. Make sure you're prepared for that. And finally, for the VIX, let's see the VIX. The VIX, it is down 11%. It could come down to about 20 and try to bounce. That really depends on how the market reacts. The market will dictate this. Just be very prepared for anything and maybe a bounce off 20, which means the market could get rejected off resistance levels which are close to where we are. That could be like 400 on SPY, or we could go higher and that could bring the VIX down even lower. We'll just have to wait and see. Lastly, for my closing remarks about Tesla, there's major resistance between 198.5 and 200. If we're super bullish, we'd want to break 200 and get to about 210. If we're bearish and we end up failing, we could get rejected off this zone. So I don't know if we're going to break it tomorrow. If it fails, we're going to likely come all the way back down and test the previous mentioned support zones. I believe Tesla's going to fight for this area into the early hours tomorrow, then start trading sideways, start to consolidate. It might start to pull back a little bit, but overall, I think it's going to try to hold up. It's going to be very close to this level we're currently at. And I also believe that once the rate hike decision comes, as we get closer to it, we might see Tesla pump to about 200, maybe higher. I don't know if we're going to break it. And then from there, we just have to wait and see what happens with the rate hike decision, the FOMC, and I can't really predict it from there. So just be prepared for a very big move by the end of the day tomorrow, within the last hour and a half to 1 hour. Be prepared. It's going to be crazy. Thank you all so much for listening. Have an absolutely incredible rest of the day. Get ready for the FOMC. It's going to be a huge day for the entire stock market. And I'll see you guys in the next one. Tesla to the moon because the long-term future is still incredibly bright. And peace out.